Folks, there are very few people in the United States that look at the housing market more often than I do. But one of those people is Lance Lambert from Fortune. He is all thing housing and has an amazing Twitter page that is a must follow. Lance, how you doing?
Good. Housing, housing, housing. Always a lot
Yeah,
of stuff going on.
it's amazing every day, right? Every day you have new content, new forecasts, new stuff. So thank you for doing all you do there. I actually want to ask you a question, right? We're now 26 days or 25 complete days into January. And at least from where I sit, as somebody who releases content every day on housing, when people reach out to me, most of them are saying, wow, little bit busier than I expected. So, what are you hearing out there? Maybe my audience is skewed.
Yeah, hearing the same thing. It started essentially the first couple of days of the year. I got some DMs, and I didn't share the first few, and then by the time I got like the sixth, seventh, eighth, I was like, okay, I need to share one of these.
Right.
And so the anecdotal stories was that housing demand had kind of swung up more to start the year. And I think there was, obviously demand isn't booming, right? But there is some feeling of optimism because things were so bad at the end of the year. And if
Yeah.
you rely on transactions, you were kind of in a scary place at the end of the year. And so any type of life there feels good. And that was the anecdotal evidence. Now we have data, and the data says yes, demand, mortgage purchase applications has moved up a bit to start the year on a seasonally adjusted basis. And I think that last word matters because every year at this time, you're going to see an uptick. But if it actually upticks also on a seasonally adjusted basis, I think that's
Yeah, I don't
significant.
think people understand that. I mean, I think a lot of people hear mortgage rates are up and they're saying, but they're always up this time of year. No, these are up on a seasonally adjusted level.
Yeah, exactly. And let me share the data.
Please.
I'll share it. So here's mortgage applications, and this is on a seasonally adjusted basis.
Mhm.
And you can see here, well, let's go back to the 2000s. You can see the demand boom that happened in the 2000s. And
Mhm.
this is the credit boom, right?
Yeah.
Easy money, a lot of money pouring in, people buying homes with speculation.
Yeah, people
And
people refining homes on speculation. Yeah.
yes. And the Fed goes into in rate hiking mode through here. Housing peaks, housing rolls over, but then, a little bit of life, not too bad. And then the bust happens
Right.
and just a free fall through 2010 with
Sure.
activity.
Makes sense.
Then you can see we had a very weak housing market through like 2015 with
Mhm.
prices bottoming around here. And then we moved into a recovery. And this, housing market was strong, bidding wars, especially all over the West and, through a lot of the country. And tight inventory continued to tick down each year throughout this and got in, was a very strong housing market. And then you can see COVID happens and then housing roars. But it actually, demand was actually higher than you can even measure here. And because, these are mortgage applications, so they've kind of made it through, the bidding process
Sure.
and these are closer to transactions. Um, if you look at the number of bids that were placed on homes total and the amount of people that didn't get homes that were bidding on homes, you would see that demand was actually much bigger through the pandemic housing boom that we can even measure with this
Yeah,
data.
I agree.
And it weakens later in 2021, but then kind of gets stronger moving into 2022. Mortgage rates spike, and then we just free fall through the second half of 2022. And then around November, right around when mortgage rates topped, we smacked into, we started to kind of level out in terms of the free fall. And then to start this year, we've ticked up to 205 from a bottom reading just of 159. And that was just
Yeah.
at the start of the year. So we moved up And there's no guarantees that this is the demand trough,
No, of
that we
course not.
the bottom, but there's a signal that it might be. And what we can say definitively is that the free fall in activity through the second half of last year is over, the free fall. So it doesn't mean we're at the bottom, but the free fall phase
Correct.
has stopped. I can say that definitively looking at the data.
Yeah. I think there's lots of stuff going on in the market in January, and you've seen them. I watch your Twitter page every evening, and it's very clear that not only mortgage apps are up, which we have evidence on, but we also have more and more agents talking about open houses, offers. I can't tell you how many agents have told me I had a listing that had no showings for 60 days and suddenly it's in escrow. I had a agent that I actually have a dollar bet on in Vegas who sent me a note saying, "Oh my God, Michael, I think you're going to win. The median home price in Vegas so far is up 5 grand." There's just a lot of things going on. And oh, by the way, let's not forget inventory. Inventory is, last time I heard, 970,000 available homes. The trough was 880. And I believe that 970 is overstated. I believe that 970 includes a disproportionate amount of luxury homes. So first time homes are probably at a record low, first time or affordable, whatever you want to call that segment. I think the housing market is on the cusp of being even more unhealthy than it was last year when you look at the entry level home, but I could be all wet and wrong.
Yeah, I don't think anything's going to be more unhealthy than last year. There
Okay.
because demand is so restricted that you know that's the interesting thing is so months of inventory, right, is higher now, right? Even though there's fewer homes, but that's because you need fewer homes to satisfy
Correct.
bottom of the barrel demand, right? So if
Correct.
the number of homes moving off the market every month is teeny tiny, then months of inventory moves up a lot more because you need fewer months of inventory to satisfy that demand. But I hear what you're saying with more strength there, though, at the entry level.
Yeah. And again, something that I think will be reported on probably in the next 2 months is, and I actually did this with all the agents, and I've asked all my followers to do this. I want to hear what the median home price is in your market. Let's just say 400 grand. I want you to go into your inventory or your MLS, and I want you to give me 6 numbers. I want to know 2x the median, so 400 would be 800K and above. What is active inventory and what's pending? Then I want to hear what is active in pending 400 to 800, which I'm calling the move up market. And then I want to hear active versus pending 400 and below. And Lance, what I've heard so far is luxury, 2x the median, is usually 12 to 1, 10 to 1 active versus pending. Where if you go to entry level, it's more like 2 to 1. And that's what I meant by 2023, maybe even being more unhealthy at the front end, because I think this housing market data is going to be so distorted by the wave of luxury properties just sitting there with wish pricing. I think most analysts are missing that today.
So this now that we've had some evidence that maybe we're reaching the demand bottom, I reached out to Allie Wolf over at
Oh, love
Zonda.
Allie. Allie's
And
amazing.
Allie's great because she has such a good pulse on the builders.
Yes.
And so here's the Q&A I have with Allie. I reached out to her and I asked her 4 questions. The first one was I asked her, there's early signs that, housing demand, which plummeted last year, is starting to recover. Are you also seeing this, and why? And she said there has been an uptick in buyer interest since the beginning of the year, and it's related to 3 things: seasonality, acceptance, and discounts. Seasonality, very obvious. This is the time of the year when the housing market starts to come alive a little more, and really spring season then starts around Super Bowl time. So we're really, this is the time for everybody to kind of be on their heels and be attentive to what the data is showing. Because, this is when, the market really starts for the year. And so seasonality is the first reason. The second reason is acceptance. Consumers are essentially accepting that 3% mortgage rates are gone, right? There's a little bit of okay, this is the new reality. There are no 2.5% mortgage rates. There are no three and a
That's
half.
amazing. I mean, I've studied the consumer for 30 years, Lance, and that's a record time frame, right? The consumer to come to acceptance already. That's even faster than I would have expected. But Allie Wolf's got her finger on the pulse, so good for her.
And the other thing is discounts.
Yep.
And this is especially on the new home side. Existing inventory has been so tight over the past 5, 6, 7 years that new homes have become a substantially higher piece of inventory.
Yep.
And the builders, unlike existing homeowners, are much more likely to drop prices, to do incentives. And so a lot of builders have, they've already ripped off the Band-Aid. Instead of doing 2%, 1%, which all that really does, according to Allie, is put buyers in deflationary mode. Because if they see builders ripping off 2% here, 2% there, like the iBuyers do, they're just going to hold off. So where builders have essentially found success is they rip off the Band-Aid and they just go meet the market.
Fire sale.
10, 15.
One-time cut, move on. Yep.
Yes. And so 40% of builders in the US have already cut between 5 and 15%. And so the discounts with the rate buy downs, actual price cuts from builders, mentality, acceptance, and seasonality, that has all come together to kind of move transactions a bit more. With rate buy downs, builders are usually paying between 10 to 70,000 to lower the rates.
Oh, 70 grand rate buy down. Damn.
Yeah. And that's the preference over cutting prices, because you cut prices, it does two things. It moves down comps for the future, which if we're in a lower mortgage rate environment, you would kind of like to have kept those comps because it'd be harder to fight back, especially if as we move forward, if appreciation is kind of out of the market for a while. And the other reason being that all of the people that you have in the backlog that have already bought, if they're seeing people at the front of the line get cuts, they're going to be like, hey, what about me? And especially if those cuts are bigger than their what they put down, that could create some issues. Data on price cuts in December, 43% of builders cut on a month-over-month basis, 56 left flat. We've seen that shift for January. 56% have held flat, 32 have lowered, and actually 12 now have increased. December, nobody increased. January, 12 increased. And this is, though, a signal that prices this is, a red flag for saying that, okay, we probably have not bottomed out price-wise yet in the US. If there's still more builders cutting than there is increasing, is how I see it, is one of the itty-bitty flags, but that's a side story. In some markets, the average detached new list price has come down 20% in Zonda's data, and while there's others still at their peak. So it's still a very bifurcated housing market, including on the new home side. 2023, this is according to Allie Wolf, we still expect home prices to be down in 2023 compared to 2022. But how deep a decline will depend on how quick sellers find the market with price cuts. This happens on a community to community basis, right?
Agreed. Yes.
You finding the market. Some places have already kind of found the market a little more so. Other places are still not there. What happens with mortgage rates, how inventory levels trend, and if we hit a recession. I would say on these four things, okay, so how inventory trends, this is something that up above Allie gets into, but a question right now is, there was a lot of people in November and December and October that delisted their home. They put it on the market. Sellers didn't see the prices that they wanted, didn't see the offers that they wanted. Also looked the fact that mortgage rates were so high, and some of them were like, you know what, I don't need to sell right now. I'll wait this out. Let's see if mortgage rates come down. Maybe there's more demand in the spring. And so of the delisted homes, how many of those move over into this year? And so
Yeah.
there is a chance that, Super Bowl time comes and there is more of this inventory that makes its way into the market. For anybody who lives on transactions, they would love that to happen, right?
Of
Demand
course. Yes.
up and then inventory moves up. But that latter happening does have an impact on where the price side moves.
Yeah, and I
Um,
think I think the most recent data on that is new listings are still down. Last I read, you can correct me if I'm wrong. We're down 17%. So again, days on market are going up, but net new listings are still. At least the last read I read this week was down negative 17%. Is that?
yeah, we haven't seen it yet. If
Yeah.
if it's
Okay.
going to come, and for builders, so with the price, with the rollover in prices, and I think this part matters.
Okay.
Builders have a big backlog, right? Not a lot of it's completed though, but there is a big backlog. And
Correct.
they've been working through it. And these next 6 months are a significant period for winding down that backlog.
Mm.
If there's not a ton of existing homes on the market, builders are in a more favorable place, right? There's
Right.
less competition. They don't need to drop as much. So if inventory stays lower, they cut less, right? Now, let's say inventory moves higher, then the builders cut more. And then what that would lower comps more for especially new communities and pressure on comps. So that's why inventory is so significant these next several months. Because the group here that is most likely to cut prices and put downward pressure on comps is the builders, and they would be threatened from the existing home inventory. But everybody knows that inventory matters, but that's kind of how, the process of it mattering so much right now is that, there is actually leverage to move down prices on new construction, but there would need to be the inventory on the existing side to help to do it. Otherwise, builders might get lucky here and not have to cut as much as they would think, which
Yeah.
has an impact on, the overall correction too.
Absolutely. Well, Lance, one thing I know for certain is you are housing at Fortune. Where can people find your Fortune articles, and how should they follow you on Twitter? Because if they want daily updates, that's where they should go.
Yeah. I know that what's going on in the housing market isn't the biggest story in the country. It's way down there, but I cover it like it's the biggest. And
Yeah.
what I mean by that is I'm trying to find every detail, any shift, any of these new forecasts, and I try to put as much of it as possible in my Twitter feed. People can find it at News Lambert, or they can Google Lance Lambert Fortune and find all my stories. And the only other place I am is I come on here once a week. So Twitter, they can find my author page, or they can watch your YouTube videos.
Awesome. I appreciate you, man. Again, you have your own playlist. It's just simply Lance. I'm very sophisticated with my naming. Thanks, buddy.
Thanks.